How to analyze the current Bitcoin market with the Wyckoff method? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. You can enjoy a maximum $30,030 bonus for trading. On BitGet, you can receive a $100 trial fund after completing Know Your Customer, KYC, and a $100 deposit. Participate in BitGet X crypto trading competition to unlock the prize pool worth $15,000. This is a sweet deal. You're welcome to click the link below to participate. Alright, let's take a look at the weekly candlestick chart of the Bitcoin market. Previously, I've mentioned this line. Let's draw a line from the highest point. That's the line. When the price breaks through this line, it shows that the bearish market is likely to end. Because in a bearish market, the trend line should act as the resistance. Psychologically, not the real resistance. Normally, the real resistance is drawn as a horizontal line. But the slanting one can't be considered as the real resistance. As you can see, a breakout is clearly shown at this point of the downtrend. Let's further study this. The breakout actually serves as a clear signal to buy or go long. After that, the price action experiences a big retracement. Moreover, when we look forward to the breakout appearing, double breakouts are a more secure signal. If the price only breaks the slanting trend line, it isn't safe enough. It needs to break out the horizontal line too. If the price breaks through both lines, it will be safer to say it's a breakout. Hence, the most perfect and confirmed entry point is right here. Right? When the price breaks through the first resistance level, and then the slanting trend line. I believe this point is a very important entry point at around $25,000. Moving on. Actually, we can mark an accumulation phase based on Wyckoff's method. I think it's drawn here. It can only be drawn in this manner. Whether you move it further up or low, it can be proven wrong. Why? Wyckoff Trading Tools and Techniques by Edward Meng. I believe many of you have also read the same book that I read. According to this book, during the accumulation phase, institutional investors will accumulate sell orders in order to prevent the price from moving upward. As long as the market is kept from moving upside, the institutional investor can accumulate chips during this phase. Why must the price be kept down? It's because the low price trend allows the institutional investor to accumulate chips at an incredibly low price. As you can see these 2 points, it shows a sign of the institutional investor suppresses the price from going up. So, I think the upper boundary of the accumulation phase is at around $25,000 and not higher. For example, at the level of $30,000 or $31,000. I don't think that's the price for the upper boundary. Besides, the upper and lower boundaries of this phase are just unique. When we examine the trend, it's possible to identify the sole phase that's correct. As for its lower boundary, I think it's at around $18,000. So, the trading range built by the institutional investor is around $25,000 to $18,000. You may wonder if the price below is included. Well, the price below here is also within the range of the investor's build. But the main purpose for the price to go down here is to lure the retail investors to sell their chips so that the institutional investor can absorb them. Well, we can refer to the accumulation phase. In the previous period, it was right here. Actually, there was some controversy about whether the phase should be drawn like this or like this. Okay. According to what I said just now, it must be drawn like this. The reason is that you can notice the institutional investor's intention to keep the price suppressed. It's shown at these points, but it's not suppressed at this point because the price is breaking through. You can see that no matter how the market develops in the future, the accumulation phase will not reform again. You may argue that the price returns to the phase on March 12th, but it's impossible to buy positions on March 12th at this point because the price goes back right after it falls. It's no way to buy positions at this point. So this situation proves the idea I said. The institutional investor won't allow the price to return to the trading range they build after the price breaks through it. So, what's the safest point? To go bottom fishing during the previous accumulation phase? It's very safe to buy. In the range of $3,100 to $4,300. Because this is the range where the institutional investor builds their positions. Alright, let's take a look at the current market. After the bearish market ends, where does the institutional investor build positions? Most of the trading range they build. Well, the positions below here also count, but their proportion may not be as high. The trading range built by the institutional investor is concentrated between $18,000 or $18,500 and $25,000. Therefore, as long as you build your spot positions within the white rectangle, it's considered very safe, because the price won't return to this phase no matter what. If it does, you need to be very careful. Let's further examine this theory. If there's a massive retracement, at this point, the upper boundary of the phase should play an important role as the support level. If the price falls at this point, it's indeed a perfect entry point that you can never miss. Why? From the angle of Wyckoff's method, what does this indicate? It's the LPS. The last point of support, LPS. The last point of support. Right? If the price falls here, it's also another LPS and serves as the perfect entry point. We should also consider the corresponding price and volume. You may wonder, what if the price straightaway goes upward without falling at the resistance? The price just rises directly without touching the resistance here. That's a signal to trade too. But it's quite difficult to identify the entry point. If the price goes up directly, I will trade too, but with smaller positions. If the price falls here at a favorable price, and it's easy to identify, I will trade with larger positions. However, judging the current market, as I mentioned in the previous video, if Bitcoin price oscillates at this price range, I consider it to be risky in the early stages. But oscillation is also a way of correction. For example, the previous way of correction is by retracement. Is it feasible for the current price to go sideways? Yes, no problem. Especially if the oscillations continue for a longer period. I believe the possibility of a downside retracement to occur is lower. Okay, let's revise this again. The longer the Bitcoin trend oscillates at this range, the higher the possibility of the price rising directly. The longer the Bitcoin trend oscillates at this range, the lower the possibility of downside retracement. I believe that's how it will work. Because downside retracement is one way of correction, as well as sideways movement. No problem with that. I'd say that sideways movement is a stronger correction. As for now, I plan to hedge a small portion of my spot position. As for Ethereum, I've already sold some of my positions in batches due to the Shanghai upgrade. Let's switch to a smaller time frame. In the 1 hour time frame, we notice a symmetrical triangle here. Should we trade at this point, when the price breaks through the symmetrical triangle? In fact, I mentioned this in the last video. It's not worth trading here, because there's no surge in trading volume shown. I'd say only experienced traders can recognize this. When I first started trading back then, I used to trade when there was a breakout pattern. I would definitely trade it. But after observing many cases, I realized that the breakout is considered a true one only if it's accompanied by trading volume. The possibility for it to be a true breakout is higher. But if the trend breaks through during holidays, and with low trading volume, the success rate will depend on luck. At least technical analysis can't help much in this regard. Some people may argue that the way of drawing this trend line is ineffective. No, the trend needs to be further classified, and corrections should be made to maximize the success rate. Alright, thank you. You're welcome to like and share my videos, and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through?